Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's March 27th. This will be our chart lesson for today. And real quickly, a couple of housekeeping things. Friday is Good Friday holiday, so no trading. The market's completely closed. It doesn't even trade till noon. But even when the market is open, like till noon on those holidays, don't trade that stuff. You'll just get stuck in a most of the time you just get stuck in a tight range and you'll get yourself in trouble. So I recommend not trading those days anyway. But tomorrow's completely closed, and I guess Monday will be a normal trading day. It looks like so we'll take a 3-day weekend off Friday this week. Tomorrow we don't do a chart lesson on Friday anyway, so it doesn't really affect this week, and we'll get a full week next week. So it doesn't really affect anything as far as the chart lessons go because I just do them Monday through Friday anyway, or I'm sorry, Monday through Thursday anyway. And so we'll be back Monday, and Monday's a regular trading day, and we'll just take the day Friday. It just won't be a midday chart on Friday, and I won't be answering any emails on Friday. I'll take the day off and take a long weekend. So um, anyway, there's that. So we'll be back tomorrow, and that'll wrap up our week. And for now, let's go to the daily chart. You can see we had a big up day today. We bounced right off that midline. You can see that midline coming right down through there on this daily chart. And lo and behold, once again, we bounced right off that midline and took off higher. So as soon as this market gets out of the overbought territory, it runs right back up into it. So this rally's not over yet. I mean, twice here we've had at least kind of 3 days of correction when before we couldn't hardly get but a day or so at a time. So we could be getting close to a top here, but I'm thinking probably not, just knowing this is election year and that they're probably not going to let this thing sell off. We might get a correction between now and the fall of some kind, but I don't think they're going to let it sell off between now and the end. That's too important, and that would probably be a nail in any president's coffin by letting the market drop right into an election. So especially with all the other issues going on right now in this country. So anyway, there it is. Let's flip over to the 2000 tick chart. It doesn't look anything like this. Of course, we were trending down most of the day. We found support, and then all of a sudden it just rocketed up right into 230, and it shot straight up. And so most of this movement came late afternoon. A lot of it after 2:30, in fact. So, but let's flip over there and take a look. So you can see how we were range bound, and we spent most of the day down here in this lower half, and a lot of it right along the support line. We really were probably filling this gap. Notice that the market opened up here at 8:30. This is where this yellow line, you can't really see it because that's where the highs of the day were. And here's where it closed yesterday. So normally that would leave a gap because you wouldn't see this gray part between here on a regular session chart. This is a 24-hour chart, but if you went to a regular session chart, you'd see the close here and the open up here, and there's a big gap. And they almost always fill that pretty quickly, usually on the same day. And today was no different. They filled that gap, and once they filled that gap, it rocketed right back up and made a new high and closed on a new high. So but for the most part, we spent most of the day just chopping around down here doing nothing. So this is a really hard trading day. It's just real mixed trading. Not much going on. It's hard to trade this stuff. There's not a lot of trades today. This chart lesson is going to be fairly quick because there's just not any setups. And a lot of it's just, just by the time you think you know where prices are going, it turns and goes the other way. So there's no consistent real support here. No real consistent highs. There's a few triple tests in here, things like that, but not much. There's just not much to trade here at all. Sometimes a day like this, if you got something else pressing, it might be better off to take a day off because it's easy to get chopped up in this stuff. Either way, let's zoom in here. We'll go through the trades and we'll wrap the day up. You can see the early channel that we had working up here, and 7 o'clock came just as we were coming back down to the trend line. And notice we didn't make it up there this time. Doesn't matter, we ended up bouncing. And we didn't quite make it up there again, and this time we get the break, and they tried to make a new high and couldn't. They tried multiple times, and that was the best they could muster up, and then it kind of sold off and went to the lows. But anyway, the first trade was a second entry here. I marked this green. I'm not crazy about this signal bar, but it is a confirmed trend line. It's clearly, this is a double top, so it's clearly a one leg down first entry, and then a second attempt at a leg down that bounces right at the key entry point. If this closes higher, this is blue all day long. But even at green, it's clearly two legs back to the key entry point, and you know that's questionable if that closes in the top 1/3. It's close, but I marked it green either way. It's aggressive, but off those key entry points, you can see how it rocketed off. That's where most of your big moves are going to happen. If this closes outside, then you think totally different. But with it closing and turning up right off that key entry point, you know, you may consider that. So I did mark it green. Then we start working back lower. You get a close outside new low, and you start going higher, and you get a first entry, and there's a second entry right here, but that signal bar is no good. You can't really trade that. It runs back up and it finds resistance right along that same line where it had been finding resistance. Now, notice this move up here. Notice that you got a move up, a two-legged correction, and then an equal move leg up. It's like two measured legs up, and that little two-legged correction in the middle here, that's generally the center of the pattern. Unfortunately, there's no second entry long because of the signal bar. And then, of course, we didn't make it back up. But notice we tested this once. We came back, we tested it twice. Turned back down, comes back a third time. And then it turns back down off that. So you can argue that's a triple test. It's a fairly decent signal bar. It looks a little congested. It's really not until this bar forms. But if it breaks below those 3-4 bars of matching lows there, it's probably, you're going to at least get a scalp out of this. So I felt like this was worth taking, especially with the two legs up. And you don't know that it's going to go all the way to the bottom, but you figure you'll probably get a scalp out of it. And you figure you'll probably test this low again at a minimum, but it just keeps going. And of course you get a break here and a couple of legs down to a new low, and then you get another two-legged move. There's a second entry there. So this is technically not a second entry, but there's 4-bar matching high, and it matches where the second entry triggered. And this is a big bearish bar, and it's clearly two legs back to the EMA. So if you, I like going short there regardless, even though it really the second entry triggered here, one tick below this bar. And you can see this bar went one tick below it. But it comes back, and it just makes that 4-bar matching high. So if it makes a matching high, you can use any bar you want. And this definitely qualifies after two legs back. I'm taking that trade, especially when you hadn't had anything any better. It drops down to where the overnight lows, the last close was, and bounces. Of course, there's no signal bar there. You don't get a lower high. And, of course, there's a trend line working up. You get a close outside, move to a new high. And notice those 3-bar matching high. It breaks above that and turns back down, and that's like a 4-tick signal bar after a break in a new high. I mean, there's always the odds it could go higher again, and I can't remember exactly how many ticks there were back. So you've really got enough there, but that's playing it close. So you would expect prices are at least coming back to the EMA. So if you can squeeze out a scalp between that, I'd say you probably take it. It's a little aggressive, and I marked it as such. But you can see the congestion there, and it's a failed breakout, so it's probably going to come back and test the lows again. And that should give you 6 ticks, because there's 6 ticks between there and the EMA. And this thing just kind of takes on off. So you might even got a runner there. And there is a 1, 2, 3 triple test here, but there's just not room to get out before that resistance, and there's not much room to the EMA. So I think you have to sit tight here. Maybe you get a second entry, but you don't. It comes up and it just finds resistance right along that same area again, turns down, and then you get the little failed breakout. You really can't take that one because of the trend line. I think you got to wait, and then of course it does go above it, and you get this trend working up. And there is a second entry short right there, but we're bouncing off the lows. Okay, I had a slight interruption there, but I think this is where we left off actually. But this trend line's still in play, and you see it holds right there, so you really can't go long right there. Then by the time you get here, it's congested. It would have worked, but it's tempting even to go short there because we do have this coming up with a break and 2 legs up. But this is just looking sideways, and this is, I mean, this one, and it makes a new high, so, and it's got some stem. So in this case, I think you need to wait on a lower high, and you just don't get one. You just get some more congestion, and then it fails out the bottom again. Again, you can't go long right here. I think you need to wait on a higher low, which again, you don't get one. Runs up to the top, and here you do get a slight close outside new high, and you can argue you got a triple test there and turn down right off the highs. Bearish bar. I like that one. And then it breaks lower and tests this again. Now you got a 1, 2, 3 triple test with a nice signal bar. It ends up taking this a little while to go. You really get another triple test, but you don't have any room to scalp out before that last high here. So that one really concerns me. It turns out to be the best move of the day. And maybe after looking at it after the fact, you can say, okay, well, there's clearly a triple test there. But the problem is you've got this resistance, support resistance, and it just acted as resistance twice. Really 3 times, because this bar did too, and it closed like that. So that makes me wary of going long above it. It's a possibility. Maybe you argue it's green, but I didn't like it in real time. After the fact, I'm like, well, I should have taken it, but it was probably the right call. It doesn't quite fit the rules, and there's a lot of risk there. So it's probably the right call not to take it. There's another second entry here, but again, congested. Look how that midline across there had been holding. That looked like the high of the little range right there, a little congestion area. So because of that, I don't think you want to go long there. And again, it's just dropping long till it drops out. And you just got a fairly bullish bar here, but it's, you know, it's still inside this steep channel. So you might get a break in new low. So I don't think you can enter there, and then you're just congested again until finally you get this little break lower that fails and turns up. If you wait for this to close, I don't think you'll enter it. I don't think you should, because there's so much stem. But when it first breaks lower and turns up, this is mostly bearish, and on a failure, it feels like maybe you could go long right there on the engulfing bar. I still marked it green, but maybe you take that trade, and then, you know, if it closes more up on its high, then maybe you go long above that and it's blue. But the way it kind of played out, I think you have to mark that green. Most people are better off to leave those engulfing bars alone. You really need to know what you're doing to trade those. But here, when it ticks that one tick, at some places got strong support like that, and then suddenly reverses, most likely you're going to get a scalp out of it in most cases. But you just need to have some experience with that and have traded it a while. This one just runs up, close outside new high, but no signal bar, just congestion. Channel up, no close outside that channel, no retest. It just drops, gives you a couple of legs down. So now you got a break and 2 legs down to a new low. And you also got a first entry, second entry long, and a good signal bar way away from the EMA. I like that one just to hopefully to ride it back to the EMA. And also this channel might have played out at a much higher low than the last pull down here. So this thing may take off this time, and sure enough it does. So if you caught this one trade, this was a really good trade. And I wouldn't exit here just because it's 230. Just don't enter any new trades at 230. Excuse me. Here you might just hang on to this until right into 3 o'clock and then exit. You know, the way it plays out, you really could have ridden it almost all the way up till you get usually what I would say is wait till you get your first bar that closes outside and then a break below that, and that would be way up here. you really would have almost exited at the very high. Well, you would have of the original move. So that's how I like to play those sometimes. That'll get you the most bang for your dollar, is to wait for the first close outside the trend line and then a break below that. And that would have been right here. You'd have got a right, you'd have ridden that too. Just see what that would have amounted to. That's 24 points in 26 minutes. Not bad. That would have been a nice move. But yeah, there's just not a lot of trades here. This is really hard trading. No, there's lots of choppiness and range and no consistency. Um, it's hard trading, and you see there's not many trades here. So if you struggle a little bit, don't worry about it. So yeah, just don't beat yourself up if you struggle today, because this is hard trading, and a lot of times you might be better off to take the day off. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.